Hello and welcome. My name is Manesh Samtani. I'm the editor at Regulation Asia. Welcome. So almost at the end of the day, thanks once again to all of our listeners for joining our event. This next session, so we earlier heard from a few of the exchanges about some of their practices on surveillance and sort of managing market misconduct and abuse. So now we sort of take a deep dive into how the market participants sort of see surveillance and misconduct. So first off, I'd kind of like to kick straight off into introducing our panelists. First, we have Damian Bearzatto, Global Head of Product and Capability and Risk Surveillance at Macquarie in Melbourne. So Damian has worked both on the buy and sell side regulatory reform programs, including MiFID II, central clearing, non-centrally cleared margin programs. He's also delivered surveillance capability uplifts as part of various enforcement undertaking programs. Welcome, Damian.
Thanks, Manesh.
You're welcome. Thank you for joining the session. And then we have Deepanvita Upadhyay. Sorry if I'm not saying that correctly. Executive Director and Head of Front Office Supervision, Conduct and Control at Nomura International Wealth Management in Singapore. So Deep, I know you spent 10 years in risk consulting, working with various regulators on investigations, and then sort of another 10 years or so in the financial industry and leadership roles involving frontline risk and control functions. So welcome, Deep. Thank you for joining.
Thank you. Thanks for having me here.
No problem at all. My pleasure. And we have Selina Tindall, Senior Solutions Consultant at Smarsh in Singapore. Selina specializes in communication surveillance and artificial intelligence and is working with lots of firms across Asia to address the challenges of communication surveillance. Welcome, Selina.
Thank you.
Thanks very much. And finally, we have Vince Turcotte, Director at Eventus in Hong Kong. So I know Vince is working with businesses across the region on market and trade surveillance and monitoring approaches. Previously, he was at ICE. Before that, Nomura, New Edge, UBS, JP Morgan, the list goes on. Welcome, Vince.
Thanks, Manesh.
You're welcome. So yeah, without further ado, I'd kind of, maybe like to get a few thoughts from Selina and Vince, just kind of seeing the scale of trading expand so rapidly over the last 20 years and maybe more so in the last year or two with the pandemic and all of that. Obviously, with this has come maybe additional opportunities for bad actors to abuse markets. So I'd kind of like to kick off by asking the both of you, seeing as you deal with many different firms in different markets, different asset classes, where do you see are the biggest concerns in the industry when it comes to market conduct and market abuse at the moment? Selina, you want to start?
Yeah, sure. So a lot of our clients are still seeing kind of the classic forms of market misconduct, what they're looking for, things like rate fixing and wash trading, spoofing, etc. In the last few years, 1-2 years in light of the pandemic, there's been a lot of focus on being able to capture all the different new communications, things like Microsoft Teams, Zoom, and also the prevalent use of WhatsApp. It seems like a lot of people have been moving along to WhatsApp and WeChat in APAC, and needing to actually monitor that in a secure way that shows that the organization are still part of that conversation, so they're not doing that on the sly. And also needing to look at general behaviors. So we're not looking at just specific, within communication surveillance, we're not looking at specific, this person says I need to spoof this trade or whatever, but someone acting secretively or someone boasting about how well they've done recently could be all indicators of something suspicious, and could be patterns of behavior that actually lead to being able to see other areas of risks within their employment, as it's often a behavior pattern than just a siloed one-off alert that comes up. So it's important to kind of look at the whole spectrum.
And Vince, what are you seeing?
Well, I think there's no constant other than change. I mean, I've heard other panelists talk a little bit about Wall Street bets and the surge in volumes and so on. And I think obviously with everybody being at home, there's been a surge in market participants, millions of new people coming into the markets, and some of them not knowing the rules when they come into trade. And there have also been new asset classes. I mean, certainly the emergence of crypto and some of the carbon markets that previous participants have talked about. Each of these, different asset classes has little nuances that you have to sort of take a look at. And so when you're looking at it for a platform that does multiple assets, the problems just as it multiply. I think cross-product risk as well is becoming a lot more prevalent. People are looking at correlations in misbehavior, perhaps in the swaps market versus the futures market, versus equity derivatives or cross-platform arbitrage trades that might be pushing the market a little bit from, say, Taiwan to Singapore across different futures markets. And these are problems that have been around for a while, but the technology is really just catching up and being able to solve these problems just in the last couple of years, I think. I think the other thing, and it's a theme that's constant, but just accelerating, is the change in regulations. I mean, we've seen a lot of new things happening. I think the most recent development with the change in the China futures and derivatives law is going to help them accelerate their compliance culture and really bring, I think a new compliance culture into their way of thinking about the markets domestically. We've seen that same thing happen in Korea not too long ago, where brokers who were previously having to monitor the behavior on exchanges have pushed that down to their clients and said, now you're responsible for it. Now you're going to have to be the ones who manage this risk. And so the whole culture is evolving around the regulatory environment. And of course, again, crypto, where there were no rules a few years ago, there's now an evolving compliance culture there. And as crypto moves more towards the mainstream and mainstream becomes more adoptive towards digital assets, then that whole environment is changing as well. So we're having to deal with all of these problems on all of these fronts for various clients. It's a great challenge. There's just a lot happening right now.
Yeah, and you raised an interesting point about sort of the regulatory environment changing around, monitoring and surveillance approaches. I'm grateful to have two practitioners on this panel. From an industry viewpoint or from a practitioner's viewpoint, what trends are you, Deep and Damian, what trends are you seeing in the industry in terms of using surveillance and monitoring approaches to guard against misconduct? Deep, you want to kick off?
Sure. So I think on the point Vince mentioned, right, I think the regulatory environment is getting more and more complex. It's something that organizations are grappling with. With the regulations getting more complex, processes are getting more complex as well. And that in turn means, the achieving compliance is getting more complex, right? So there's many different permutations and combinations that, our bankers need to be aware of in order to be compliant. And that in turn means, surveillance is also getting more complex, right? I think traditionally we've had these manual ways of testing where, you take a bunch of samples, you perform testing to test for compliance, but that is turning to be not very sustainable anymore, just in light of, I think, how the industry is moving. So I do think surveillance needs to become smarter, more efficient as well. And it's an area that many banks are actually heavily investing in, right? In automation, in leveraging data analytics as a key component of their surveillance programs.
Damian, what are you seeing?
Yeah, and from my side, I think, you made a good point around the data and the complexity. I think, companies are seeking new advanced, data analytics capabilities to build, profiles of bad actors and the relationship between bad actors or bad groups of actors to really kind of understand, the past and present behaviour and how they can actually, protect potential, future behaviour as well. On the data stream as well, I think companies using more metadata to, again, kind of build that profile for certain bad actors. Kind of longer term, if there are potential, incident from a voice perspective, they want to tag the voice against the comms, surveillance, trade, personal account dealing. So that's all very important to kind of create that, that profile. I suppose secondly, from a trade surveillance perspective, I think, in terms of some of the trends we're seeing or where the future may lie is for example, with the typical like insider trading alert, you'll typically run it against corporate actions, news events, etc. But I think these days, when you've got Elon Musk, the Trump, the social media, the tweets, for example, I'm thinking that kind of longer term that maybe we can integrate with some of these social media platforms as well to actually generate better alerts, more effective alerting as well.
Okay, excellent. I think Deep and Damian, you've both sort of highlighted, sort of surveillance is getting more complex. There's a need for that data. So I guess, speaking more on that kind of the increased use of data and technology, I'm kind of curious to understand a bit more how advanced this is. So are you seeing the industry sort of using, more analytics, RPA, data science in these sort of approaches?
Yeah, I think, absolutely. I think, from a comms perspective, voice for some, that matter as well. I know Selina's across this, but, the old kind of lexicons versus, machine learning. I think, from what I've seen is that most players in the industry and a lot of our peers are still using that hybrid approach where you've got a combination of both, lexicon and obviously models as well. I think lexicons, certainly some people perceive them as blunt instruments. However, I still believe they can be sharpened and still be effective, till this day. So that's my view there. But I still think, machine learning, I think most companies are looking at it. It's early days. Certainly it can reduce false positives, and we've seen that, across the industry. And certainly that's a massive win operationally for our, level 1, level 2 analysts. And I suppose, the challenge is having the actual, relevant, production quality data to actually, train your models going forward. So we find that a bit of a challenge as well.
If I can add on, Manesh, from a private banking perspective, which is where I've spent quite a few years, my last couple of years in, there's quite a heavy reliance in, on phone calls and emails, right, from a surveillance standpoint. So there is quite a focus to actually convert those into text, right? So voice to text is a big focus area. Again, I think some way to go, but definitely that's the vision, right? I think for many banks to convert voice to text, to have more, algorithmic based, keyword pattern searches to actually look for indicators of risk, right? So again, like I think Damian said, it's early days, but it is in the vision of many banks, I think.
Okay, Damian, you mentioned briefly, machine learning, and Deep, you mentioned a little bit about algorithms. I'm kind of wondering in terms of when it comes to using such approaches, is there a regulatory expectation, or how do you address the need to be able to explain the models that are being used?
Yeah, it's a great question, Manesh. I think the explainability factor is big. If we were to kind of be rolled out in front of a regulator, typically you could explain how the lexicon policy works. Bad language, bullying, etc., etc. But I still think there's a fear amongst peer organisations if we were to kind of roll out. For example, how does the machine learning algo work? For example, is it working as intended? How effective is it? For example, so certainly I think that's still a bit of a question mark. In the industry, certainly there are tools these days that actually describe the data mining techniques, the scoring, the reasoning as to why we make certain decisions around thresholds, etc. But still, I think that that's a space where I think we need to get better at.
Maybe Selina.
If I can add on one point there, I think regulators are actually also expecting banks to move in this direction, right? So there is greater expectations also from a regulatory standpoint, as I've seen from my experience, expecting banks to actually leverage data analytics more and more.
Okay, thanks for that. I was just thinking maybe Selina might have something to add, given the work that you do with artificial intelligence. I think previously we talked a little bit about the responsible use of AI. Anything to add to this?
Yeah, I mean, what Damian said is completely right. You know, things like lexicons, they're easy to explain. You have a list of keywords, and that it's easy to say to the regulator, this word hit, and therefore it raised an alert. Whereas AI kind of requires more things like model reports that describe how they were created in the first place, what were the recall and precision, and what was the data that was used in order to do that. So it's important to have these model reports to provide confidence to the regulators that there has been enough thought and foresight into creation of these models that they're actually going to be doing the right thing. The ultimate goal there being to be able to then say, look, if we give Mr. Regulator a sentence or an email and we can tell it exactly whether it'll hit or not and why is what they're looking for. But it's a lot more difficult than lexicons, because lexicons are binary. It's a yes, no, whereas models are more predictive. Again, yes, on the use of responsible AI, a lot of the regulators are pushing nowadays towards looking at how fair AI is and making sure that they're to minimize bias and maximize transparency there. And it's a good focus to make sure that you're monitoring your employees and making sure that everything is used in a fair way.
Yeah, and I think certainly with you being in Singapore, I think that's been a big item on the regulatory agenda there. Vince, kind of sticking with this theme of machine learnings and the use of algorithms, I know your surveillance system leans heavily on this to address false positives in trade surveillance. Can you tell us a bit about the approach that you're using?
Yeah, sure. I mean, I think both Deepa and Damian have raised really good points. I think to Deepa's point about the days of just sampling a huge number of orders and hoping for the best in terms of sifting through it and getting a representative idea of what's going on are gone. I mean, that's legacy technology. Damian also pointed out the idea of being able to explain what you're doing to a regulator and have it all make sense. And I think that's key. And we spend a lot of time with regulators going over how our system works and how the models are set up and so on. It's really, when you reduce it to its simplest form, not as complicated as you might think. I mean, we use a machine learning approach, for instance, to train the alerts, to filter through them and identify as many as possible that might fall into the categories of various misbehaviors. We don't believe in, I think what our global head of reg affairs, Joe Schifano, calls hyperparameterization, where, oh my God, I've got 10,000 alerts. It means my parameters are too wide. We don't do it that way. We want all 10,000 of those. What we want to do is sort through them and find the highest probability candidates to give the analysts an opportunity to really review the behavior and then identify patterns through them. And so a good example for us in terms of robotic process automation, or RPA, which is just really a kind of a nice way of saying a very intelligent algorithm, is to sit down and use an example that we have from one of our clients in Europe. Using one of our legacy competitors, he was getting over 4,000 wash trade alerts a day. And so they were using a sampling technique to go through and see if they could identify it, trying to figure out which might be bad actors and which might not be, kind of like throwing darts in a dark room. And we sat down with them and helped them write a 17-step algorithm that basically just goes through, what a RPA is Jeff Bell, who was the president of the firm, says it's a snippet of code that does what your analyst was doing previously. It helps them automate the function. So you ask them, what are you looking for? And they say, well, we might be looking for a fixed tag that identifies this trade as part of a spread. Well, that would then, of course, be categorized as not a candidate for alert. Then we might say that there was another aspect to it. Is it been in the market for a certain amount of time? Has it passed the 15-second rule, for instance, for the mercantile exchange? Well, yes, it has. So then it's probably not going to be a candidate for an alert. But each one of these steps, as it goes through, is being the potential candidate alert is being labeled and pushed off to the side and stored for later reference. You might find then when you find a certain account or a certain firm that's having a lot of difficulty, you might go back and review the entire history, all of the orders from that particular firm or particular account. Well, the short story is that we were able to reduce these 4,000 alerts a day down to under 20. And then that analyst's time is redeployed in something a little bit more meaningful than throwing darts in the dark room and trying to figure out which alerts are important and which ones aren't. So it's really, it sounds a little bit more elegant than it really is. It's just hard work interviewing each client, each candidate, each client, and saying, what do you really need? What steps do you perform when you're going through this process? And then automating those. And then the whole thing is overseen by a management review process where we do go back and take samples. Say at the end of a month, we'll go back and look at all of the rejected candidates and review some of them manually through a random sampling technique, just to make sure that we are hitting the right notes. And we've been very satisfied with the results, as have our clients. We've gotten it down to, I think, a 4% margin of error, which is pretty good when you look at the overall scenario.
Vince, I understand sort of you're also doing some work in crypto markets. So I know, maybe crypto is not a huge focus of this panel, but I was kind of curious to ask you, compared to traditional markets, how different is the surveillance that you do in crypto markets for exchanges and so on?
Well, I think it differs in a few respects, but it's most important to identify the ways in which it is the same. There's the same spoofing behavior, wash trade behavior. Market manipulations are roughly the same, whether it's crypto or whether it's a traditional asset class. Some of the differences might come in, are these behaviors illegal? There are, in the let's say the ASX, wash trades and self trades are illegal. In some crypto environments, they're not. And there are incentive programs for various market makers to ramp up their volume, and they will create volume by making tighter markets and sometimes bumping into each other, but not violating rules when they're doing so. So it's pretty interesting to note that. I think the other thing is, obviously, it's a 24/7 market. You really have to be on. Your technology has to be on point around the clock. And we have most of our clients who are engaged in this, in these markets are very, very, clued up on technology. I guess that's another discerning factor, is that a lot of guys come into the crypto space, not from traditional finance, but they come in from engineering. They come in from, from software groups. They're really very focused on technology. So they're very demanding in that respect. And that's kind of a good thing from where we sit. And I guess one of the other differences is there is a lot more AML focus, transaction monitoring, for instance. In traditional finance, the opportunities for money laundering on a lit venue are much lower than they are on some crypto venues. And the players who are in that space are keenly aware of that. They really want to guard against it. And so the idea, for instance, of somebody bringing in, a recent high-profile case in the States where somebody was able to make off with a huge amount of Bitcoin from one of the exchanges, and then started dropping it into other exchanges and exchanging it for other coins, a process known as chain hopping, and then pulling it back out. I mean, that's kind of a unique feature within the crypto world, but it's something that, in traditional finance, where you have people doing money pass transactions and other types of wash trading, it's a little bit more obvious than it is in the crypto world. So that's an evolving science in crypto. And I think, as was pointed out earlier, the regulatory factors are evolving very rapidly there as well. So there's a lot of challenges that are unique, but at the heart of it, it's really the same behaviors that we're looking at.
Thanks, Vince, for sharing that. Selina, I know your focus is less on the trade side and more on communication surveillance, but certainly you've also had to address the problem of false positives. Can you talk a little bit about that?
Yes, of course. So especially in the last few years, the prevalence of remote working has led to phenomenal volumes of data. That's across electronic communications, audio, so emails, chats, telephone calls, WhatsApp calls, etc. Whatever now is being captured for surveillance. And the problem that a lot of our clients have seen is keyword fatigue. So when you're using lexicons and that, you end up having way too many keywords and have to reduce the sampling. And it's something that both Deep and Vince have kind of talked on, is that you can't really sustain, it's not very sustainable to have a sampling based system, because you just have way too many alerts, thousands and thousands to work through, and not a big enough team to cover it. And if you end up missing some of those risks, then the regulators and the auditors are going to be very angry that you've let some of this stuff slip. So it's important to then use kind of AI and behavioral models on top of this. So start to layer it on top of you can still have lexicons, but apply these AI models on top to try and reduce those false positives. So you can get rid of things like spam or echo reduction, so that if I'm sending an email to Damian and he sends one back, and it doesn't end up alerting every single time, and only on the ones that actually matter. And things like newsletters, which is actually quite hard, because you might have someone like, Joe Blogs, who sends daily reports with a form of newsletter, but he's also sending it from his own account, and he can be a normal person. So you can't just blacklist his email account to get rid of all of his emails so that they don't alert, because he might actually be sending some messages from his own opinions and could actually end up being a bad actor or person of interest. And most importantly, when you're getting rid of a lot of these false positives, you need to make sure that you're still finding those real risks and not missing any. So there's that trade-off of that precision and recall to make sure that you're still getting those alerts that matter. And we've just found that through our experience using artificial intelligence, the models that we've been familiar with have been able to do that very effectively while keeping the standard processes and for the users to actually get their work done.
I'm interested to understand a bit more, the types of communications that you're capturing. Sort of how do you deal with platform communications such as WeChat, WhatsApp? How do you capture the data? How do you analyze it to find meaningful insights? Could you elaborate a bit on that?
Yes, of course. So we capture, it's necessary to capture for the institutions all sorts of communications channels, whether they're emails, so it could be from Exchange, or it could be on Office 365. So a lot of the communication channels are moving towards the cloud. Chat messages such as Reuters, Bloomberg, etc., and telephone calls. And as you said, those telephone calls, they're less so now because of remote working from desktop phones, but a lot on mobile phones. And they could be the mobile phone data, or they could be on WhatsApp or WeChat calls that need to be picked up. And there are various agents that you can do although the data is encrypted, to have like an agent that's involved in a lot of the chat rooms, or to have a dummy version of the app that acts in a very similar way but provides an unencrypted data source for surveillance. Models kind of need to then be applied across the top of that data, because as you can imagine, there's phenomenal amounts of data to find those signals and to look at it from various lenses. So the analytics that our clients tend to use is both looking at the individual alerts to see what's coming up and if something's particularly risky, to risky behaviors. So this kind of trend of behavior is happening within these individuals, or looking at actual individuals that seem to be alerting more regularly, or they alert a lot but just under the radar, so that actually when you amalgamate the data, they're looking quite suspicious, or the teams themselves. So once you layer that on top with reporting and management information, start to bring all that data across from different systems, you start to come the old term holistic surveillance, where you start looking at your communications from both your emails, your chats, your telephone calls, and so forth, and look at who your individuals and who your teams that are acting suspiciously, as opposed to just looking at that needle in that haystack, which can be a lot harder to pick up on.
Sorry, I just kind of wanted to ask, how do you sort of deal with sort of encrypted channels such as Signal, Proton Mail, where I guess these might be the platforms that bad actors might purposefully use because they're difficult to track due to the encryption.
Yes, unfortunately, if they're not, the use of the encrypted channels need to have policies in place, really, that tell you that the employee needs to have an agent attached to the communications, so that they can start monitoring that particular channel. The hardest bit of having people working from home is when they're actually using these other channels without following policies and being able to do it off the books, as it were, which is hard to be able to cover when you don't have someone physically in the room with you and covering you. So it's down to strict policies and governance that you need to put in place to make sure that if they do break those rules, they can be picked up on.
Damian and Deep, maybe you can talk a little. I'm kind of wondering about sort of once you capture and maybe Selina, you have something to add to this as well, but sort of the transcription element. Maybe, when you're capturing voice data, for example, being able to transcribe it accurately and so on. Any views on that, Damian? How is that developing?
I think voice is a good one, but I think regulators are increasingly expressing their view that voice is not being sufficiently monitored in terms of the risk that it does pose. So I think voice technology is also improving week to week, but I think the key is around the transcription, obviously from the voice, from the phone, mobile phone, turret, what have you, and then how we just transcribe that, and then obviously push that through through the comms engine, etc. And I think going forward, having that integrated surveillance that Selina alluded to would be fantastic. So the voice attached to a comms and a potential trade going forward. But I think certainly, the technology in that transcription accuracy is certainly improving. The acoustics are improving as well. So that's something I know that our peers are looking to increase the coverage of.
And what are your views on sort of data? Data I've heard being cited as the biggest challenge when it comes to surveillance. And I suppose that could be trade data, communications data, and so on. Can you talk us through some of these challenges and sort of how they're being addressed by the industry, and maybe Deep, you have something to add to that as well?
Sure.
Yeah, I mean, I think the challenges are really around the voice and the comms, with the actual unstructured data and how we monitor that and how we surveil that, as compared to your trade surveillance, your more kind of structured types of data. That's a big challenge for us.
I think, Manesh, from what I've seen, a lot of focus on data governance overall, because there's so much reliance on data, right, going forward with both from a control standpoint but also surveillance standpoint, and it's complex, right? So data is one at the point of creation, but data has a life cycle which is complex, right? Because processes are complex. So I think the focus on data governance overall, end to end, really from the point it's created to its tracing through its entire life cycle, and making sure that as that data flows through our process, it remains reliable. That integrity is maintained, I think, is another area of huge focus. So a lot of banks are investing in data governance and models around that, and how do you manage that, both from a systemic perspective, but also in terms of accountability. Who owns what data, who stewards what data, right? Banks are actually laying out I guess very detailed data dictionary and attributing that accountability as well to kind of very detailed data, so that both from a systemic standpoint but also from an overall monitoring and governance standpoint, you have reliability over that data.
Yeah, I agree totally, Deep. I think the data governance standards are looking to increase it across the board, and just having that understanding of that that producer, that consumer flow end to end is so important these days.
Vince, I know one of our previous conversations, you had also mentioned data quality being one of the single biggest issue. So maybe you have something to add to this?
Yeah, I mean, I don't know that it's such a quality issue as it is so much a quality issue as it is a quantity issue, and an ability to look at a variety of different data environments and harmonize them. I mean, it's no secret that anybody in data science will tell you that data transformation and feature engineering are really the key to the entire thing. Writing the code is not as hard as actually getting the data formatted into a very useful and consistent format and environment. We might, from one customer, we might get a CSV flat file with 100 trades on it a day, and he might do 40 banking transactions a month. And from another client, we might get a giant Kafka bus that is, has several different internal formats that has to be completely re-engineered in order to be useful. And he may be doing 50,000 transactions a second at peak volume. So it's, these are the kinds of challenges that you face, but you have to approach both with, equal clarity. It isn't so much that the bigger one is the harder one, is the larger account, and you kind of gravitate that way. You have to be consistent and provide good quality return in any format. So I think that giving back the clients a product where their data has been reformatted, they basically own the data. They should be able to access it in an easily recyclable way at any point in the process. And that's been part of our philosophy. I mean, we also, as a firm, we kind of open up our code as well. We have different layers of code like most systems do, and we have a Python shell environment that clients can actually access and have access to their data, create new reports, do lots of new and different things with it. So the data is their property, and we allow them to use it in a way that is beneficial to them. And you could even create an entire data warehouse with an approach like that. But just being able to interact with it easily, like you should be able to be sitting on a GUI as a relatively unsophisticated user like me, and point and click and download a CSV file or an Excel file that reflects all the information that you would need to prepare a short-term ad hoc report. And at the same time, in the background, you should be able to have a massive data warehouse that you can essentially do the same thing at scale with. That's the challenge. That's really, and it's very difficult. I speak to anybody in Damian's position, for instance, or Deep's position, and you'll know that they handle several different data libraries in several different formats, and getting them into a single usable format where they can recycle it and create their own reports is a huge challenge. And that's I think fundamental to the product that we try and bring to the market is, giving people freedom to access and use their data in a way that they can go on and recreate processes and work with us to design new processes.
Selina, from a comms perspective, would you say the challenges to do with, I guess, data would be more on the voice side rather than some of the other communication channels?
Yes, so a lot of our customers and prospects that we've been speaking to in the last 3 to 4 years or so have been focused a lot on audio. They've already got data being ingested for for emails and chats and so forth. They're working on that. We've got the machine learning models to work on that. But with audio, we often get clients who say they want 90 to 100% accuracy, which is just not possible for one. Human isn't even possible to do 90 to 100% accuracy on telephone calls if you listen to the amount of noise within them. And the other one is the quality of that data. A lot of the customers that we have, they only have access to archived calls. So when we process those calls for transcription and then for applying keywords and lexicons and models over the top of it, it's garbage in, garbage out. So you end up with doing the best you can, but you might have poor quality results as into the transcription, and then you end up with poor quality alerting as a result. What some of our customers that we have seen have been starting to actually look at the source of that data. So instead of providing for the surveillance systems the archive data, they're starting to look at, okay, let's go to the capture systems in the first place and split that out to say, okay, one channel will go out to the archiving systems and you can compress it there, while another stream goes straight to the surveillance system. So you can end up with a very high quality audio input that is now a lot more beneficial to actually transcribe and do all the analytics over the top of. It's more expensive and it requires actually changing some of the hardware and the infrastructure that you have in place. So it's a slow process, but it shows that there is possibility. And we've done a lot of tests on that to show that the return from doing this change is phenomenal in terms of audio surveillance. It's just a case of being able to get that time and that effort in place to start doing that and making that change.
I'm sort of also interested in, and maybe this kind of draws a little bit from both what Vince and Selina does, but sort of I assume when you have a sort of red flag or you detect some form of suspicious activity from a communications surveillance perspective, then you sort of try to match that against the trading side as well. I don't know who's best to place this, maybe Damian or Deep, you might be able to kind of talk about how that integration is done to sort of match up those just different data sets. that come into the surveillance?
Deep, do you want to have a go at that one?
Manesh, I didn't fully quite understand the question.
Oh, sorry, just kind of asking about the integration of the trade surveillance and the communication surveillance. So sort of bringing those two pieces together.
Yeah, I think, sorry. I think on a lot longer term, having that, like I said, a case management tool or a profiling tool where you can actually tag comms against a trade, against a personal account dealing, for example. Even other metadata available would be fantastic. A print log, for example. I just think there's countless different ways where we can actually create it and that profile on certainly bad actors.
It's a huge question. I mean, we were recently shown a case study from a big bank and asked how we would approach this. How could we help them with it? And it was a very large swaps trade that was done and hedged with futures, but both trades were associated with a bond issue that went out into a local market. And there were voice communications associated with this as well, because some of the swaps were done on an OTC basis, down a voice box, and some of them were done on SEF, and so coordinating all those different data sources and bringing together a coherent case management structure for them to review was I think really a challenge. And so they went out to each of their vendors or prospective vendors, as we are, and asked them, how would you approach this? Where would you be able to make a contribution? And I think that the easiest answer is that there's no easy answer. The hardest part, from my perspective, is in Selina's world, where how do I coordinate the voice communications, as you've asked, Manesh? How do I coordinate those with the transactions I'm seeing in the swaps market and the futures market, and then the expressed rates that come out on screen from the bond? And it's a big question, and I think it's still a challenge.
Yeah.
Okay. I guess I'm interested to also know when it comes to sort of the controls that firms should have in place. What else should we be talking about? Besides sort of the traditional trade surveillance and some communication surveillance techniques.
I think firstly, it'd be good to get people back in the office. I think that's going to play a big part, no doubt. But certainly, I think sales, trading people, they're kind of moving back in. But I think a real big focus on culture. From a front office perspective, I think that's very important. Uplifting, compliance training, for example, having a solid, robust control governance framework. I think they're all very important.
We found that a lot of our clients have been looking beyond just market abuse, but looking at the behaviours of their individuals across conduct and culture in other ways. So things like bullying and harassment and other areas and mental health well-being as well, in terms of how do we use AI models to detect and to mitigate against some of these other behaviours, because quite often your bad actors won't just be bad actors in one siloed area. They'll actually be showing signs of having not done their training or having not done certain others and showing risky behaviours in other particular areas. We're also seeing there's a lot of upskilling of users, where traditionally you'd have hundreds of people in your level 1 team that are just closing off alerts, and they're kind of bored to death just closing down those alerts that are clearly false positives, and then handing over the ones that might be potentially interesting to the level 2, level 3. And we're seeing that those level 1 teams are actually closing down a little. They're much smaller and they're dwindling now, and because of the reduction of false positives, that they can then start upskilling those individuals to level 2, level 3, and start to actually understand AI. It seems a lot of the end users now need to actually understand the analytics that go behind what they're looking at, as opposed to just being presented with a set of alerts.
If I can add on, Manesh, I think also the quality of your key risk indicators, how well you design them, will allow you the ability to measure your controls and their effectiveness effectively, right? So the better the quality of your KRIs, the better your insights, the faster your insights, on real, to identify real risk issues. And that also then gives you the ability to escalate the right things at the right time, right? Huge amount of focus on escalation as I see it. Because, when it comes to risk matters, time is of essence, right? If you respond quickly, sometimes you can mitigate things in time. So time is really of essence. And I think that's another area of huge amount of focus, I think, for many banks now.
I would say that I think that, echoing what a couple of people have said, that you have to also remember that technology is not going to solve all the problems. RegTech, the entire goal of it is to make sure that we take care of some of the miscellaneous tasks, the lower level tasks, in an automated way. But what do you do with the time that creates? And I think that's the big question. I think you take that time and redeploy it into cultural definitions, helping people to find the right culture within the organization, helping people to upskill, as was mentioned earlier, giving them a little bit more of a higher purpose once you freed them up from some of the tasks that technology can take care of. And on a macro level, you see this happening within the regulatory structures as well. Regulators are bearing down a little bit, and they're insisting on stronger and higher cultural barriers within firms.
Yeah, so we just have a few minutes left, but I thought maybe we could spend a little bit of time. I mean, certainly there's a clear recognition from the industry that technology can be leveraged to ensure better market conduct, or let's just say good market conduct. But certainly it takes a bit of fine tuning and something that I guess will improve over time. So maybe kind of a question to each of you as we sort of wrap up. Sort of what advice do you have for firms looking to deploy, these types of solutions to enhance the way they monitor participants and staff and so on, and conduct their surveillance activity? Maybe Deep, we'll start with you.
Sure. Okay. So maybe the top 3 advice I would share is first, keep a long-term strategic focus, because this is a paradigm shift. It is not a small change. I think that long-term strategic thinking is required. Second, I think innovation, give importance to that. Many banks are actually creating, dedicated innovation labs within banks. So it's an important aspect. And third, I think, remain open to and agile to new ways of working. So partnerships to me is a very important aspect. There are many fintech organizations out there which have the resources, the technology that can be leveraged by bigger banks. So, keep that focus that, I think partnerships, rather than creating all of that know-how in-house, may not be necessary. That would be from me.
Damian?
Yeah, I think Deep. Yeah, I think you're spot on in terms of that longer-term strategic view and your target state architecture. What is your tech strategy? For example. So, often I get the question around buy versus build, and I think a lot of the peers I speak to, that looking to potentially buy when they can, and obviously build where they can't. So that's something that I've kind of heard over the journey as well, but. Also, probably one last thing for me is having that, I suppose, deeper relationship between, the frontline or the compliance, business and technology, making sure they're kind of talking.
How about you, Selina?
A lot of the clients that we speak to have a lot of focus on, in the last couple of years, particularly on doing more with less. So being able to integrate your solutions together and try and focus in a way that you can have these reporting, management information, etc., to start looking at an integrated perspective, bringing as many different data channels in together so that you can actually do more with that data and analyze it in an effective way. And also, it's not something we haven't really spoken about today because it's more of a detail, but the shift to cloud, where we're seeing a lot of our customers moving to the cloud. It's with better information security, lower total cost of ownership and so forth, easier to maintain an infrastructure and whatnot. It's definitely something that that firms need to start looking at if they haven't already, and shift towards to kind of to have as a platform for their surveillance systems as well.
I guess also it means better analytics as well, better speed. Vince, I guess you have the last word.
Last 30 seconds, I guess. But I think that just kind of echoing in part one of the things that Damian said, but one of the things that we're working on the FinTech Association in Hong Kong is understanding workflow across a compliance department. I can give you an example. One of our clients is relatively small. He has identified 9 separate compliance domains. They have 7 separate systems that they use within these domains. And his big problem is getting it to coherently all fit together. Like, what is the overall compliance process? In the world of crypto, we have a couple of people that have, obviously there's the on-chain world where Elliptic and TRM and some of our peers in that space live. And then there's the off-chain world where you're on a hosted wallet environment, on a ledger, on an exchange, which is where we live at Eventus. But getting these things to all come together and to form coherent pictures of the bad behaviors is a real challenge. And it's what we're seeing right now is that in fact, it's kind of the number one thing when we talk to clients out here. How do we better structure our workflow to make sure we're getting, input from all of the different areas, from on-chain, from off-chain, from voice, from the other different domains, from the AML domain. Is the AML department in a separate city? I'm not kidding. There is one that has that. There is a client that we talk to that has that. And are they really talking to the people that do the market supervision? So we really have to, I think, look at it as the way that the industry has grown. It's grown disparately in each of these areas as new technology has been added. And I think sitting down and reassessing how it all fits together into a single coherent compliance program is really important.
Thank you so much, Vince, and certainly well, we could keep this going, but certainly a great place to end to kind of have that single coherent compliance program. A great message to end with. I guess I'd like to first thank our panelists. So Damian, Vince, Selina, Deep, thank you so much for joining the session today. Look forward to the next one with all of you.
Thanks
so much.
Thanks very much.
It's a real pleasure.